What's going on, guys? Welcome to this video. So this is the first module of the day trading course. This will be about market conditions, and in this series I will cover literally everything from market conditions to finding my key levels, supply and demand, support and resistance, to entering the markets, stop loss and target placements, risk management, um, journaling, pre-market plans. I will literally hold nothing back in this whole day trading course. This is everything I use on a daily basis. And following this whole course, you will have a lot of insight on how to approach the market, especially the futures market, the S&P 500, which is obviously what I trade, but you can apply this to NASDAQ as well, or to US 30, whatever you trade. I'm just holding nothing back. I'm showing you everything that I use every single day. So let's cover the market conditions in this first lesson. So you have to be able to spot what conditions the market is in, because you will have to adapt your trading to each different condition. The market will either be balanced, which is a ranging market, uptrending or downtrending. Now, generally, the S&P 500 or Nasdaq, whatever, is usually uptrending if you look on a higher time frame. So if you're looking at, for example, the monthly time frame, you can obviously see that it's always been uptrending, and it has had some crashes to the downside, such as this year, in 2022, in 2019/20, and then 2008 as well. Okay, so generally it is uptrending, but again, this is on a higher time frame. This is the monthly time frame. Obviously, if you're on the intraday time frames, the H1, the H4, the M30, all that stuff, there are also mini trends within that, and that it's not just to say that you should only be focusing on buys on the S&P. It's just generally the buys opportunities will obviously be bigger than the sell opportunities, generally speaking. Okay, but you can make money on both sides, especially if you're scalping. So if the market is balanced or ranging, this could be for 2-3 days. It can even be 1 to 2 weeks, which I've seen previously on the S&P. It's just important to avoid trading in the middle of these balanced ranges, as you'll be a lot safer just playing off the edges, buying low, selling high. I can tell you, I've had many losses of trying to force trades in the middle of a balanced range, and I could have avoided those if I would just sit on my hands and wait for the edges to play out. Now, obviously, this goes without saying, if the market is uptrending, it's safer to focus on buys, but this doesn't mean that you cannot find sell opportunities. They just might be short-lived. And the opposite goes for if the market is downtrending, it's safer to focus on sells. And this is not to say that you cannot find buy opportunities, especially because we're scalping. They just might be short-lived. So you just have to keep in mind that your targets might have to be a little bit shorter. Now, a balanced range would look something like this. As you can see, the market usually respects the resistance and respects the support level. It's quite risky to trade in the middle. You can make money in the middle, especially if you're an experienced trader and you know the market inside out, the market you're trading. It's just generally a lot safer to focus on the edges, and this is where the bigger moves will come from. Now, uptrending, you can clearly see the market is making higher highs and higher lows, and there will be some retracements into potential areas where you can find buying opportunities from. Of course, you cannot enter the market anywhere and any breakout, expect it to fly up. This could happen sometimes, but more often than not, there will be retracements that will give you buy opportunities. And the same goes for a downtrend. You can see lower lows and lower highs being made, and there will be retracements for you to get sell opportunities in this downtrending market. Okay, so let's head to the chart and show you some examples. So let's start off with a balanced range. Let's go down to an M30 time frame. Here, for example, you can see a very short-term balanced range. You can see this area right here is the balanced range low, and this area right here is the balanced range high. Now, if you look closely where the biggest moves come from, they usually don't come from the middle of this range. They come from the edges. As you can see here, big move from here again, consolidate a little bit, and then a big move. And also from the top, you can see the biggest sell-offs come from the edges. Okay, yes, you can find trade opportunities in the middle. It's just a lot riskier, and the trades are shorter lived. Now, a very interesting thing to see about balanced ranges is once these balanced ranges are broken to the upside or the downside, in this case to the upside, aggressively with a lot of volume, you can more often than not see that there will be some retracements into the balance range high in this case, where it retested and then had a massive reaction to the upside. It came back down again, respected this balance range high again, and had a nice reaction. Okay, and as soon as you can see this balanced range high was broken again to the downside, where exactly did it come to? You can see this 1 hour candle. It wicked all to the bottom, respected this balance range low, and then flew back up again. Of course, this gets a little bit messy over here. This was also FOMC on Wednesday, so this is why price was a little bit to the wilder side, very volatile. But you can clearly see how this level was still being respected on both sides here. Even on the flip side, it was respected multiple times. And then once it broke the balance range high again, it came back down to the balance range low, and this turned out to be a nice support level, okay, that is still holding. Now you can also look at, if you zoom out especially, you can see more balanced ranges. So here, for example, there's a balanced range where you can see this resistance right here. And then we have the balanced range low, the support level right here. So what's interesting to see is that the biggest moves, again, come from the bottom or either from the top of the balanced range. You can see the biggest drops come from here and the biggest rallies come from this price level. And again, this is not like an exact way to draw this. This is just an area where price might react from. So you don't have to draw these too precisely. There is no precise way of drawing it. It's just a general price area where price might return to and show a nice reaction from. As you can see right here, once the balance range high was broken, it came back down multiple times to retest and had reactions from there multiple times. Now, if you look further in the future, this balanced range was broken to the downside again, retested beautifully, and then where did price exactly come down to and react from? From this balanced range low. And as you can see, this level has still been holding. This level, I wouldn't even look at that anymore because price has been going down through that too many times. But this level right here is really showing its strength, that the buyers are putting a lot of orders into this price range. So this would be a level for me in the future to still look at, even though we're far away from this level right now. But this is still a very strong support level or demand level, whatever you want to call it, which was originally a balanced range low. Now let's take a look at an uptrending scenario. So as you can see, price has been uptrending for quite a while with some balanced ranges in between. Now here is a nice shift from a downtrend, making lower lows, lower highs. We see a nice base basically being made at the bottom, and then break of structure to the upside, multiple break of structures, which could confirm a uptrend. Now in an uptrend, it's a lot safer to look for buy opportunities, and this just means that even the smallest areas for buys could play out. Even the small areas that don't look strong could play out unless you see a shift in the market that could potentially show a downtrending reaction basically, and just a complete shift in the market, which kind of happened here. We had this rally, then we had this base, then we started making lower lows and lower highs, and this is where you could potentially start looking more for shorts. And it didn't last long. As you can see, it just made a base and then again break of structure to the upside, making higher highs and higher lows, and then buyers were just again in control of the market. Even like I showed you, the smallest areas can still work. As you can see, look at this level, how it's just getting respected. And it's crazy how levels that you wouldn't consider them very strong levels to be buying from, they just keep getting respected over and over again. It's just constantly everywhere. You can see support, you can see demand levels, and keep in mind I will make videos about both support and resistance, how to find, draw, and validate them correctly. Look at this. This was the balance range that we were looking at before, how it's just getting respected, and buys are just showing massive reactions all the time, non-stop, just keeps pushing the price higher with some retracements. And here, for example, you can see again the rally, the base, then some lower lows and lower highs. Maybe you can find some short sell opportunities, but then again, that changed very quickly. Again, massive rally to the upside, break of structure, making higher highs and higher lows. Look where price just keeps reacting from. The buyers are a lot in control. You can see all the strength at these major dips, how the price is just keeps pushing upwards, and it's just crazy, to be honest, to see how buyers are just so much in control. This whole area right here, price wicked into it, and it just keeps going on and on and on. Now let's try and find a downtrend move, which is obviously not easy on the S&P 500. That doesn't happen too often, but once you find it, like here for example, you can see how price was just generally uptrending and then made a massive base and then started making very clear lower lows and lower highs, which is where then you can start looking for sell opportunities. And you can see right here that the sell opportunities are usually bigger moves and the buy opportunities are not that strong. You can see very slow action on the buy side with a very aggressive um, dips to the downside, and you can just keep looking for sells until the market shifts. You can see supplies, you can see resistance, and it just keeps going on and on and on until the market decides to make a change in direction, which is in the end what happened here. Massive downside move, then a big base and started making higher highs and higher lows again, then again a rally, a base, and then started making lower lows and lower highs again. So once you understand just this concept of how the market moves, how to trade accordingly to those market conditions, you can find much bigger and more profitable opportunities. But then again, I don't recommend you guys to only look for sells when the market is downtrending or only look for buys when the market is uptrending. You can find opportunities on both sides. Just understand that the moves might be shorter lived, and you should adjust your trading setups and your targets according to those conditions. All right. So anyways, I hope this first module of the trading course was helpful to you guys. If it was, give me a like, subscribe to the channel. If you have any questions about each topic that I'm going to be uploading, let me know in the comments down below and I'll get back to you. All right. So thank you for watching and we'll see you in the next video.